The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. Friday, April the 19th, in lockdown here in the Newton area, right next to Watertown, where all the havoc is going on. And even more importantly, everybody around here, of course, is safe. You have to just shake your head in absolute wonder. I'm not going to go into... I have the same feelings as everyone. It's just horrendous. When you read the stories of carpenters who have lost their hands, hairdressers who have lost their legs, I mean, just people that are... it's a terrible situation. I had, in fact, got emails earlier in the week regarding that young lady doing her doctorate from China, and that is just yet another tragedy. You can just go on and on, so I cannot dwell on it. I have to just say our thoughts are with all those involved, and for us just to have a minor hardship of being locked in here, hey, that's nothing. So let's go straight to the market. I was talking about something yesterday that the day before, today's Friday, during the day Wednesday, in fact I mentioned it on Wednesday, I had a particular indicator that I developed called the ChapmanWave Trin Gauge. Basically, it's Richard Arm's Trin Index, used in a way that he never uses it, at least not that I'm aware of, and the specific numbers I look for. And this indicator has had just a phenomenal record for a long time. When I say a long time, I'm talking about years. It's up in the 90%. If I'm a little gracious with it and give a tiny little bit of leeway, for instance, if I had an indication that the Dow would be down, what I call a rug pull the next day, regardless of how the futures are prior to the market opening, and there were two occasions where the Dow was spectacularly high intraday. One day I remember being up 350 or 360 points, and then there was this huge tumble. It came down, and it went to a plus 80, and then it closed at about 105. That's the Dow. S&P did pretty much the same thing. I considered that a miss, but unofficially, if ever that was a rug pull, that was a magnificent rug pull. Then I have another indicator on the same. One is on the way up, one is on the way down, that says if it reaches over a certain level, within 1 to 2 sessions, there should be a really sharp rally that starts in the E-mini. Usually it's the S&P futures. Usually it's overnight, in fact, or by the early morning before the market opens, and that carries through into the general market. Well, thus far, because of yesterday's action, I have to call it a miss, but the day is young, because all that needs to happen, the S&P is up 10 right now. If the S&P goes, I'd say 3 to 4 points above yesterday's minus 10 on the S&P, that will be a success, especially from early morning going to where we are right now. I would have to consider that a success. It doesn't have to close there. It just has to get there. Now, when you consider that out of my four Dow horsemen, GE and IBM just got smacked. GE is down, let's see, GE is down 3.37%, down 76 cents at 21.91. And IBM is down, I don't have it right in front of me. IBM was down 13, now it's down 14.63. Having made a peak E-top in the weekly, I've got it as a C/G. I'm calling it a C so far. In the monthly, it certainly could turn into a G. That'll be very interesting if IBM makes a most serious top right here. Anyway, the month is still young, and it's down 7%. For the Dow to be only down $23, the S&P up 10. I am really impressed at the count. I have to call it at this particular point the counter trend strength. I'll go into that in much greater detail as we move along with the show, as I always do. In the meantime, back at the ranch, just run the numbers. The Dow is down 25 at 14,512. The S&P is up 7. No, that's not right. It's up 9, 63 at 1551. The comp index is down up 35, 3202. Gold is up 10 at 14.02. Silver's up 0.04 at 23.28. Crude oil is up 27 cents at 88.03. And I'm looking at this high-grade copper. I have to tell you, we're getting closer and closer to a pretty darn good pullback in the market, because that crude oil price is telling me there's a left side, right side price time match, which just broke this week, yesterday in fact, which goes back, as I'm looking at the July contract, and that goes back to the low of 3.1175 back in October, the week of the 21st of 2011. This week we've snuck under it. We have not closed below it. Let me just type that in here. 3.1175. Good. There are four numbers I can manage it. 3.1175. It's when you get the euro and you get those 3.1175. There are. And today, this week's low so far is 3.1 or 3.0700. So this is saying it's getting quite critical in copper because JJC, let me just go to the actual index itself. Yeah, there it is. It's much clearer on the index. This is the IPATH Dow Jones AIG Copper Trust. I think it's an ETN, whatever it is. It's a trading vehicle for copper. And the low that we're looking at was a low of 38.99. Yeah, 38.99 the week of the 7th of October. And so far, I just said it about 3 times, 38.99. And so far this week we've gone to 38.69. How we close, where we close is going to be very, very important. So let's do this. This is Technical Friday, so I like to go through in the ChapmanWave. I can go a little bit more in detail. Let me just do this for one brief moment, and then we've got callers waiting already online. So I'll get this done quickly because the dollar is down 0.01. Euro is up at this point 0.003. Is that correct? Yeah, 1.3088. I wanted to do something just to show the techniques that I use. The Dow 120-minute chart has gone to a leg G, just missed the 14,420 level on the 120-minute chart, which is the 200-period exponential moving average, and is attempting to have already two fighting patterns. 14,434 was the low of April the 5th, and today's low is 14,444, 10 points higher. So far, this is a successful arch formation, number one. Number two is the volatility index has gone to peak C, and now it's pulling back very sharply. Wow, it went to 1820 yesterday. That's high. In fact, what I said to my subscribers on my opening call is my daily service. We have buys and shorts, longs, whatever it is. I have different price ranges. We could be shorter stock in the 300 and what was it? 300? No, we didn't. We're out of that one. We could be a stock that is at 378 right now. We shorted it at 383, or we could be long a stock that was at $1.78 recently and traded today as high as $2 and let me just check. I think it was $2.45, $2.48. We have a panoply of prices, but so far, at least the longs are all looking good. And the one short we have is down a little. So that's what I like to do. So in my opening call, I always have a very long discussion about, I call it overview and market today. Gives the bigger picture and the smaller picture, what to look for intraday. And what I said is if the Dow is at noon, plus 60, well, it can't with the Dow like this. But I should have mentioned if the S&P is plus 70, plus 7 or 8 or more at noon, that'll be a very good sign. And we'll see what happens. So the volatility index is pulling back sharply from the 1820 level to the 1544. I had the signal the other day that said within 2 days there should be a very sharp rally. No matter how bad it looks, there should be a very sharp. I always call it a counter trend rally because there's more an intraday thing. But if it closes at the high, that's very important. And so those are the things that I was looking for just on a technical basis. You'll see that there's a flat line right across this horizontal line in the S&P. This has to become a bounce-off area. And I have a particular pattern. I'll take just a moment to discuss it in general terms here because that's all I can do. The low bar of 14383.02 of the 21st of March is absolutely critical at this particular level because there's a pattern that I developed many years ago called the ChapmanWave flat base restart. And I must tell you that there's every chance that we're looking at something like this evolving. Now, it was great to think that the Dow could now be down 4 when IBM is down 14 and General Electric, my two key stocks of my Dow quartet, GE, IBM, Triple M, and UTX, is showing there. And this is what I kept saying. I don't want to short the indexes yet because there is internal strength that needs to be resolved. When it is finally resolved, then I think we're going to get a pretty darn good pullback. But I'm not doing anything until then yet on the index short side. No, different other key, but I'm talking about the key market indices. Let's go to our first caller. We've got Bruce in Raleigh, North Carolina. Hi, Bruce.
Hey, Basil. How are you?
I'm very good. My brother, when he came to first study here, he went to Chapel Hill. And it was a big shock to him. He had never known heat like that and humidity. But then he transferred to University of Pennsylvania where he got his city planning degree. But he loved it in Raleigh. He thought it was a really beautiful place. So
It is. It can get hot here in the summertime, though.
It really does, yes. You'd like to look at?
EXM, Excel Maritime. I've been hearing Tom and Paul are talking about 70 cents, and this thing fell out of bed. I see it hit 53 cents a few minutes ago.
You know, I looked at this recently. It was acting as one of the better price movements out of the shippers when someone had called me, and it was just breaking above the 200-period moving average. Folks, we're looking at EXM. It's trading down 35%, minus 0.28 at 50 cents. And what it did was, I've already got this noted. Folks, if you want to learn something about the ChapmanWave technique, you can use any other technique. It makes absolutely no difference. But if you learn how to label and notate the different peaks, more than the troughs even, it will at least give you a heads up. Look what happened. This went to a peak F with a very long-legged doji candle. And normally with a long-legged doji candle, you'll get one attempt at least to touch the body of the candle. This couldn't even do that because the MACD came plummeting down. The on-balance volume made an inverted V-shaped top. The relative strength confirmed that, and the MACD had two lower shoulders as it was making a high. And it looks exactly like a 1-to-1 downward move, and the test should come in around about 50 to 48 cents. I'll be right back. We'll talk about, because we'll look at some of the others. So we've got Bruce in Raleigh, North Carolina, Joe in Boston, and we'll be right back after these messages. Dow's down 12, S&P's up 11.5.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, and I'm just trying to answer my engineer because there was this ad that I just heard. As I'm listening to it, I'm saying, that is so clear. That just tells the story about how you can go to the front page of TFNN, you can click on any one of those three icons, and in a split second you can get this. You can get the live shows. I mean, where else can you get that? That is fantastic work. I have to congratulate Tom and the entire crew at TFNN. That is great. I love the ad. I'm not sure if that's the ad that is a new one that was being spoken about, but I heard it for the first time and I loved it. So let's go back to we've got Bruce. We've got Bruce and Raleigh, North Carolina, and we're looking at EXM. So Bruce, you have no position right now, correct?
Correct.
Okay. That is a very good position to have. I don't have to tell you that, right?
No.
But I tell you what I'm also looking at, and this goes to that copper contract that I was looking at a little earlier. If one of my benchmarks, which is copper, if copper's really soaring and doing well, or at least rallying and doing well, what happens is it gives me a sense, and often I get confirmation as the weeks go by, that there's economic activity around the world, because that's kind of what you expect from copper rising. It could also have been for a long time that China, which if you look at the China chart, it doesn't look good at all, but China would have been buying the copper. But this is, right now, copper is in a trading range, but looking quite weak. I'm putting it together with the shippers. You can see what my thinking is here, that if that international transportation of goods and services was expanding, we absolutely should be seeing the shippers with the dry goods moving nicely. So this is telling me be careful. 0.48 is absolutely a critical level, but if it doesn't hold 0.48, then 0.46 obviously would be the next one. That's not the issue. The severity of this peak D in the weekly chart coming down like this after the peak F top in the daily is what I call an Eiffel Tower. Actually, it's more than an Eiffel Tower. It just went straight up in 1, 2, 3, 4, 5 weeks, and in 3 weeks, it's come down to the same point. That makes me very nervous, especially if the MACD is turning down, the stochastic's turning down, and there hasn't been any strength, and it wasn't able to hold in the monthly chart above 0.72, which it should have been able to do. It was at 130. So here's my thinking. Hold off on this. I would much rather, I also looked at DRYS, which is dry ships, which had the same thing. It had a peak D in the weekly chart. Monthly chart looks just terrible, so I haven't even notated that. But it made a peak E-top at the 200-period exponential moving average, which should have become a line of support instead of resistance. So, and it's broken down. It's closed below the left side low of 1.78. It's at 1.74, DRYS. It looks to me as if it's going to try to rally, but if it breaks 1.67, then it too will go to the left side low, which is way down at 1.53. Doesn't sound 1.74 to 153 sounds ho-hum. Hey, 20 cents on a $1.74 stock is a big percentage move. Now look at this, NAT, and here's the guy that's increased the dividend every quarter for the last, I don't know what he said, 40 years or 50, I don't know what it is. It's an amazing feat. And yet the stock of Nordic American tankers has made a gap down with the Eiffel Tower pattern, straight up, straight down, looks like a capital A, and it's gone back, and it doesn't look like it's going to hold at $9.07. Looks to me like it wants to test the 870 to 850 area. So my thinking is this: I would hold off for a little while on these stocks. I'd even give up some gains to see them form a base before I would enter it. Believe me, it's been on my radar for about 3 months now. And I've not pulled the trigger once on these because I did not. I guess we're going to have to stop using the terminology pull the trigger. But I not once. So I'm going to say to you, hold off. You might give up a little percentage gain on the upside, but it's better than being there on a gap down to the downside. So I hope that helps you.
Yes.
So, and remind me again, call me again if you see EXM, but put these down, NAT, DRYS, I'm sure you look at them, and NAT. And when you see EXM, I'm not going to use that as an example. I'd rather use NAT. Yes. It's more of a company. They've got a lot of money behind them. If you can see it start to trade at 850 to 840 and not break down, give me a call and we'll look at it together and see if it's time for it. Okay?
Okay. Thank you.
Thank you so much, Bruce. I appreciate you calling. Oh, you must be having those white flowers. Those. You must be looking very pretty out there. So, Joe in Boston, you wanted to look at?
SSYS, please.
Okay, great. We'll be right back after this break. This is one of those. High flyer up, and then it came down, and we'll look at it together. Oh, Eiffel Tower. I'll be right back with Joe in Boston straight after this. Dow down 20, S&P's up 10.5.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. And the Dow is down 5. S&P is up 12.33, and the futures are up 15. So that trend gauge actually did its job again. Unbelievable. I love that. So I am on with Joe in Boston. Joe, you're in lockdown, right?
Yep.
Yeah. And
you too. You're right next door.
I'm right next door. And, you know, the tragedy of this whole thing is that it turns, there's a patina, an aura that suddenly goes over a city or a person or a family or something that should never, ever have happened. And that's what's happened to Boston. I just see an email that I got here. This is from someone at one of the universities here, and it's a student who says, oh, my God, she's studying here, and she says, my heart was broken for Boston, but now it's broken for Kazakhstan, because the two brothers were evidently at some point had lived there. And she says it makes us, people who don't know much about my country will think that we are all terrorists. And the terrible thing about this is that through an act of humanity or inhumanity, in this case it was a massacre, there's a taint that stays, and it stays for a very long time. And it casts a pall across a country, and then across the city in this particular instance. It's hard. It's really hard.
You know, it's just a different world, you know.
It just, all of a sudden you've gone from one thing to a different world, to probably reality. I hate to say, maybe that's what we're looking at. Anyway, what you'd like to look at Stratasys Limited?
I just took a small position this morning, so I didn't know if you what you thought about this one.
I needed to look at this in the context. Doesn't DDD, is this one of the 3D companies?
Yeah, this one's one of the stronger ones, yeah.
Right, this is one of the stronger ones, and DDD was a fantastic one, and then it just went plop, and now it doesn't have quite the same chart pattern. Let me just quickly put that up here.
The other one is XONE.
XONE, right,
That's
which
strong.
in fact has gone to a leg D, a peak D in the daily for the very first time. This is the second peak D that it's made, and it's consolidating. So let's do this, because the way I looked at the shippers just now, I looked at three of them together. When Bruce called, I think we need to look at these as a group, even though you don't really want to. At this point, I think we're beginning to see leadership and followers, and XON, how do you pronounce it?
X1? I don't know.
Okay, X1. The X1 company has the weekly chart is a little stronger in that I have to call this is really the first leg up. In the weekly, first leg up in the monthly, made a peak D and consolidated in the daily over the last 4 or 5 sessions, holding very well. It's at 34.11, down just 24 cents. Now, SSYS is one of the older companies. This one, if I remember correctly, this is one of the older ones. This goes way back. I just want to see where it goes way back to. I've notated this, and it goes all the way back to 1994. And it's very interesting because I've always had trouble pronouncing this one. I would see it and I say, Stratus, and then I look and say, no, it's Stratasys Inc. So that's the only way I remembered it, but I didn't remember it necessarily as a particular chart. Now, this is what I wanted to say. The entry that you got it this morning, so you got it about a point lower or so, a point and a half lower?
Yeah, just a little lower, but, I just think, it looks like it broke a downtrend line there, and now it's testing the backside of it on a daily.
See, what I would like to do is just for the moment to ignore the daily, because I want to get the tide. And the tide to me says in the monthly chart that it's made a peak E, and the last time it made a peak E, it had a severe decline from 55.66 in April 2011 through, was it 2 years ago? 2 years ago, and it plummeted down above the 200 period moving average of 1788. Now it's run all the way.
On the monthly, Basil, it took out that D within 3 months, so that could be E or A.
I've got an E, but I like to be a little conservative. I never put the A. I'll tell you why I didn't put the A, because it came down and broke the 9-period moving average, and the stochastic was pulling back very sharply. If the stochastic wasn't at 68%, but instead it was at 79 or 83%, I'm right with you. I'd say, whoa, although it's a deep pullback. But let me. So now what I'm saying is in the tide, it's more neutral in the monthly chart. Mm-hmm. Now, let's go back to the weekly chart, because I looked at it just briefly. Now, the candle with the long legs that I'm looking at is the week of the 8th of March.
Right.
And the body of the candle, which would be right at 70 and 69.95, has it done exactly what this kind of candle does normally. It becomes a magnet. And to break away from it decisively, it usually needs within 2 to 3 bars to not only break, but it mustn't, the third time, preferably the third time, should not break below the high of that bar, and the high of that bar is 74.17. Well, it's trading right now at 71.90. So that puts it, the MACD is negative. Stochastic is rallying, but it hasn't got the arch. So the curve, it's got more like an arch formation, and the on-balance volume is not good. So I'm looking at this and I'm saying, if it closes under the 9-period moving average this week, I have to consider that the 73 to 74, 75 area is going to be very strong resistance. You would, of course, love that, because that gives you a cushion if it got there. Yeah. Now let's look at now I'm not going to look at the daily. I'm going to look at the 120-minute chart. And this 120-minute chart has gone peak A, B, C minus, because it failed, which is usually very negative. But if on the retracement it doesn't take out the left side low, which would be 67.92, but instead finds support and actually breaks, but in fact is trying to test 73.31, and in fact is trying to push above that, that'll be a really good sign to say next week the technicals could improve enough that it gives us an opportunity to retest the high of yesterday.
Right. Okay, if you get a quick chance, can you look real quick at KSU?
Oh, KSU. Do you own this?
No, but it looks like it held some good support today.
Kansas City Southern. It's a rail company. It's in leg E in the monthly chart. It's broken above the trend line. It actually is a channel line, but I'm calling it a trend line. I've only got one drawn right now. There's actually another pattern that I often use. I'm going to do that now just for demonstrative purposes because this is a technical Friday. And I've put in the arch formation, kind of a cup formation that says it is in a process that has the potential to continue vertically higher as long as it doesn't, it's trading at 105.52 KSU, as long as it doesn't close on a monthly basis below 97. So we got that out the way.
It looks like it held some good support today at 100, I guess.
And it's made a peak E in the weekly chart, which says to me, be a little careful. But that's not to say that it won't go higher. It's just saying, hey, be a little careful. Now let me look at the daily. Do you have a position in this?
No, I was just looking at it because they came out with earnings and they gapped it down and they rallied it.
Yeah, this is making this can. Oh, you know what? I'm going to take a moment. Yeah, you got a little time.
Yeah.
I want to discuss something. There's a pattern here. I hardly ever talk about this, but this one is showing itself beautifully here. I'm going to do it like that. There's a pattern. You don't even need the ChapmanWave in this particular instance. You just need the ChapmanWave techniques. In this case, it's the technique of the pattern that I call the dreaded H. Very often, what happens is you go to a top, and then you pull back. I call this the Sears Holdings pattern because it happened once, and I was lucky enough to recognize it at the right time. We had a real nice trade to the upside after a high-level consolidation in that stock, which now looks terrible, but it used to look quite good at a certain point. And what I found was this one did break the left side low of 100.35. No, it didn't. Fabulous. It went to 100.58 this morning. Right. This pattern goes from the dreaded H. It has to occur at tops. It doesn't happen at bottoms. In fact, I discussed this one at my last Master Trader seminar because I just felt comfortable enough to talk about it as a particular technique. And what happens is it looks like a cup formation if you're prepared to excuse that empty H pattern in the middle. And what it does, I'll tell you right now, if Kansas City Southern takes out the doji high of 108.10, it doesn't even have to close. It just has to take it out. Immediately, there's a good chance that it's going to try for 112.25. And I'm going to say to you, out of the two stocks we just looked at, even though this one is almost within a couple of points of all-time highs and the other one wasn't, if this pattern is going to succeed, let me look at the 120-minute chart. After the gap down to this is nice. But,
this one looks better to you.
Early this morning, let's see, it opened at 100.26 and the lows are. Early this morning, you would have looked at this chart and said, oh, dreaded H failure. This thing is going straight down to the doji candle of 96.
Right.
That's why I always say, if you're looking at a daily chart, you have to wait for the end of the day before you can really discuss it. When you're looking at it intraday, you can get whipsawed like crazy. The day is still young. All I'm saying is that this is a tremendous comeback after analysis of whatever they said. They might have had okay earnings, but have a better looking out period, or vice versa. It doesn't matter. What I would like to say to you is that this is now you play options occasionally, right?
Yeah. Mm-hmm.
You see, what a pity. I wish I had seen this earlier.
You could have done a nice white lightning on this.
A white lightning would have been unbelievable.
I know.
That would have been a 500%, a 5,000%.
Yeah, you could have probably bought the 105 calls for a nickel or something.
For nothing. For 0.03. I haven't got time to look at what the price is right now.
Right.
Okay, let's forget about that. We're looking at the monthly,
it's
the
nice
weekly
to
chart.
Think about it, though, you know.
I've had for my subscribers who've had wonderful success with IBM options, but mostly the call side. I toyed with getting the put side yesterday, and I just decided my mind is not focused enough to do anything. I stepped aside. Wouldn't that have been 14 points to the downside?
Yeah, that would have been a nice move.
So anyway, yeah, that's water over the dam. We can't talk about the ifs, ands, coulda, woulda, shoulda. The 9-period moving average of the weekly and the MACD not yet crossing negative and the stochastic at 83% tells me that there is a good chance that there's at least going to be a retest in the area of the previous high of KSU, Kansas City Southern. It's at 105 right now. If it closes anywhere above 104.95, 104.93 is the 9-period moving average, I would have to consider that's really nice action with a good chance that it's going to, if it breaks above the ugly candle high of 106.17 on the 15th, that's going to be a big positive. So I like it, and it has that pattern that it goes from, it's two fighting patterns. It's the H, which should fail, but in fact is successfully held, very successfully held, which turns in, and you can't see it unless you draw it in. It turns into a cup formation. And in my eye, I've got something, it looks exactly like is that Batman? I had someone in the Master Trader series say, hey, that's the Batman. I wonder, is that the Batman emblem? Anyway, whatever it is, I like it very much. Hey, thanks for pointing it out to me, because I've been looking at the rails. I've been looking at the IYT. There's something going on here, because I've got a peak C and maybe a peak C1, C2 that failed. And that's got the same pattern, almost the same pattern as, what was the symbol again? KSU. Let me write that down, KSU. And so I don't know what percentage it is as part of the iShares of the Dow Jones Transportation Average. But when I did this yesterday, what I was saying is in the monthly chart, I don't have any other way at this particular point. I can stretch it, but I have to really think that this is leg B up in the transportation. I need to look at the dollar TRAN, because maybe that didn't go to a lower low. Oh, all right. In this case, I've got A, B, C, D. That could, in fact, be a flat base restart going to an AB. Even then, it's still peak C if it doesn't make a new high. Now, transportation index is looking very good. So I've got a variety of indexes that are starting to give me discrepancies. When that happens, you have to be more and more selective. So I think out of the two that we're looking at, I think Kansas City actually is a better chart than the SSYS. Thanks so much for calling. I appreciate that.
Take care. Bye.
Thank you. Bye.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi folks, Basil Chapman here, Tiger Technician South. I want to look at a couple of stocks here. First of all, ConAgra mentioned in the den as one of the stocks that are going parabolic, looking like 2,000 internet stocks. This is ConAgra Foods. What's going to bring this down? Unless there's some kind of a drought or just something that goes on in the whole area of food, grains, or whatever it is. So it's spectacular. All-time high, 36.08. I believe it's an all-time high. I used to have all these notated. All-time high? Let me just squeeze it. No. Oh, I'm pleased I squeezed the stock. There you go. All-time high was back in 1997 at 38.75. That's its target. It's the 36.08. Oh, man. Okay, so look at that. Look at Coke. Coke is almost all-time high. Where's it going to? It's trying to go to 44.47, high of 1998, July of 1998. Oh, these are all doing that. And it's at 42.70 right now. Look at Kellogg's. I don't think I've got, yep, we've got Kellogg's. No, to all-time high right now at 66.14. High. This is just an all-time high. And the MACD is actually at 97%. Look at Pepsi. Pepsi right now, all-time high, 82.74. Now, this is interesting that it's happening at this particular time. Why? Because when you look at this has to do with, how can I put it? It has to do with discretionary buying. After all, Pepsi and Coke, do you really need to live on Doritos and Lay's and all that stuff? And Pepsi. So something's going on, and that tells me that there's been a huge misreading of the economy and what's really going on. If you look at the IYC, this is the IYC. The IYC is at all-time highs in leg C in the monthly chart. If you look at the what was it again? XBI, I think, would be the comparable one. XBI. That's the biotech. That's vertical at leg E. So I'm saying that there are going to be areas that have to consolidate. It's coming up fairly soon. When? Not yet sure. Don't have the signals. But until it does, that's what I'm looking at. That's number one. Number two is when I'm looking at my monthly chart of the Dow, this is a doji candle and the month is not yet finished. I'm going to be watching this very closely because there's a chance there's just a chance that if there is a peak C, then we're getting quicker, we're getting closer and closer to the leg D that I need in the Chapman wave, but this hardly ever fails at a D. It usually goes to, at the end of the major move, usually goes to an E or an F. So I just wanted to clarify that. And then once again, I was asked if I would just show the chart here with the bands at the top and the relationship. I can't do it now. The relationship of 9, which I mentioned for the first time, well, a second time, but I remember, but first time in a very long while, that a lot of the patterns are matching the 1965 to the 1982 breakout period, certainly to the Nixon years when 1,000 was broken for the first time. But it looks to me like we've got a lot of the same patterns that we can expect. And triple top, yep, but a triple top that's going to be a little different because we're going to be going higher. So that was a question in the den. So I'm going to, do I hear the music? Do I hear the music once, twice? No. Going back to lockdown here. We're going to go to a play lot tonight, but, you know, a minor inconvenience considering what's going on. And I'm going to also say, hey, I really hope that things settle down really quickly. Our grief and our anger and everything should be directed to trying to make things so much better for the people that had serious damage to their persons, to their physical and mental well-being. And that's going to be really important here in Boston. So thank you for being here. Don't forget my services, the opening call. Let me just quickly check. We've got a short that's doing well on the downside. We've got 3 longs that are doing fine. Check it out, my opening call, 2 weeks free. Go to the front page of TFNN. And I'll be back on Monday. Have a great weekend and a peaceful weekend. Thank you for being here.